tomorrow, we actually have CPI data that is going to be coming out on the inflation of August. Every single month, we are going to be able to get CPI data, which is going to be showing us if inflation has risen or if inflation has fallen. What I want to do at this time is do a nice little lesson and be able to break down what is inflation. Is inflation good or bad? How does it hurt the stock market? And what should we be expecting out of tomorrow's inflation report? So let's go ahead and let's break this on down. Now, the first thing I want you to know is that we have had inflation reports, as we always do, every single month. Every single month, we are going to see if inflation has been rising or if inflation has been falling. So when we take a look over on the S&P 500, let's go back to a weekly chart. Now, in this weekly chart, we can see since the start of the year in 2022, this was at the very peak when we're all the way up at the price of 480. And ever since we have heard that inflation was rising higher and higher and higher to 52-year highs, that is when the stock market started falling and fading and dropping. And that's because the Feds have been increasingly putting higher and higher interest rates. So the way this works is we always have to try to find some sort of balance. We need to find balance between interest rates and inflation. So if we take a little bit of a step back here, let's talk about what we had all the way back in 2020. In 2020, we had lockdowns. We had the pandemic happen. We had something that we haven't ever experienced or rarely experienced. And that was a virus that came across that the world really didn't know how to react to. People got scared. People got fearful. People took their money out of the stock market because they didn't know what was going to be happening next. Businesses were shutting down. The world was changing. And we saw the stock market absolutely collapse, where it went all the way from 337 and within the matter of a month was all the way down towards 219. We saw a drop over 25% in the matter of a month. Now, just to give that a little bit of a distinction is that during our time where we saw a drop in 2022, we saw a 25% drop over the matter of about 5 months. Imagine doing everything we did in 1 month, and in 2022, it took 5 months. Nearly every single day was massive red dropping. So what happened here? Well, the Federal Reserve, they got extremely scared and they got extremely nervous. And the Federal Reserve is who watches out for our funds in the United States. And the Speaker of the Federal Reserve, Jerome Powell, he came out and he stated, hey, let's lower interest rates all the way down. And what would lowering interest rates mean? It means that things are going to be becoming more affordable. That means if you want to take out a loan for a house, take out a loan for a car, you guys can go ahead and spend more money with your credit cards, not have as much interest rate, right? Now, what would this lead to? This leads to more spending. We were so nervous that we were going to drop inside a deep recession that the Federal Reserve came out and said, hey, everyone, start spending. Drop interest rates as low as we can, and let's stimulate this economy. Now, also to help stimulate the economy, let's also send every single person who applies, or every single person who is eligible, I should say, $1,500. And we saw hundreds of millions of Americans be able to receive their checks for $1,500. So guess what we just did right here? The Federal Reserve basically made a perfect storm. From them saying, hey, we are so scared that we are going to drop into a recession. We don't want to drop in a recession. So let's go ahead and stimulate this economy by dropping interest rates and giving people money to go spend it. And guess what? We built this huge superstorm of inflation. And we did such a good job of stimulating the economy that inflation was running all the way up towards 50-year highs. We saw car prices. A Honda Civic that maybe usually goes for $28,000. I went to a store for a Honda Civic and I saw it up towards $90,000. A pickup truck that was usually about $30,000. We have still Ford Raptors and these nice again pickup trucks over $100,000. We are seeing houses that were only, let's say, $1 million 2-3 years ago are now being up for sale for over $4 million. And that is essentially what we get with inflation. Now, inflation can be helpful at times. And the reason why inflation could be helpful at times is it seems like, again, your business could be making more money. A lot of these companies on the stock market are going to start jacking up prices because they have to, again, deal with inflation. All other things are more expensive. They make their things more expensive, such as Netflix, such as, again, Apple, such as, all the, gas prices. Everything goes up, 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 up. And these companies also go up, up, up as they see more profits. But guess what we started seeing at the start of 2022? At the start of 2022, Jerome Powell said, hey, enough is enough, team. We need to fight inflation or the dollar is going to become useless. We have to raise interest rates to start getting people to stop spending. That's the balancing act right here. Can we be able to raise interest rates, be able to slow down inflation without crashing the stock market? Because let's actually go back to this point right here. In 2018, we raised interest rates and the stock market got a very strong drop. Very strong drop, very big fade right here as the stock market got weak. Now we're raising interest rates, but we're raising them a lot more. And this is why the stock market's been getting very weak ever since. So we started raising interest rates and we started with a 0.25% interest rate. The stock market dropped. Then we said, all right, hey, now let's raise them up even more. Let's raise them up to 0.5% interest rate. And we could see the stock market dropped. And then we said, hey, let's do it again. But let's raise these interest rates 0.75. And the stock market dropped again. Then the stock market started bouncing back on up. And we said, okay, let's go ahead and raise them 0.75 once again. And the stock market started fading on down. Now again, Jerome Powell came out 2 weeks ago. And he said, after raising interest rates already 4 times, 0.75, 0.75, 0.50, and 0.25%, he says, we are not going to let up. We are going to do everything in our power to keep fighting inflation. And you know what? That's when the stock market dropped from 417, fell all the way down to 390, but now we're starting to get a bounce back on up. And this bounce right here, getting you all caught up to speed, is going from 390 all the way back up towards around 410. So this, again, bounce play has been great. And there's a couple reasons on why this bounce play has been happening. First reason on why this bounce play has been happening is because when we take a look at the daily chart, we can all see on the S&P 500, as everyone knows, that we do have an awesome dip buying opportunity. We can see that this S&P 500 has been in a downtrend and been in an uptrend. And no matter what, we are always going to have chart pattern be able to hold up as some sort of support lines. Chart patterns are always going to be able to hold on up as some sort of support lines. They're natural areas where a stock is going to reverse. Remember, great stock trading is not always from what's the best stock or what's the best ETF. It's talking about where's the best reversal. And if we can figure out where the best reversal is, you can make the most amount of money. Just like when we come back up here, there most likely would be a great reversal back on down. So why else is the market moving on up? Well, the market is also moving on up because people are expecting that this inflation report that's coming out tomorrow is going to be lower than in August, or excuse me, than in July. And if we have a inflation report that is lower in July than it is in August, well, guess what? That shows that inflation is decreasing. And that maybe means that the Feds aren't going to keep raising interest rates as dramatically. So if tomorrow the CPI data comes out and we have, let's say, I'm just making up a number right now, in June we had 9% inflation. In July we had 8% inflation. And now in August we have 7%, right? I'm just kind of picking out numbers that shows that we're declining. That would say, hey, us raising interest rates is working. Maybe the Feds are going to slow down on their interest rates now. And that's why we're getting a lot of hype and excitement as traders are looking to see if the Feds are going to slow down on interest rates. Because for those who do not know, on September 21st is when interest rates are going to be raised once again. Now, we're raising interest rates no matter what. But the big question is it going to be 0.5% or 0.75%? And I'm not sure, I need to do some research, but I don't know. I think it was the last time we raised interest rates 0.75 to 0.75 to 0.75. We've only done that one other time, and I believe it was all the way back in 1960. So that is, again, a huge increase in interest rates. And if we do 0.75, 0.75, and 0.75 again, well, that's making everything more expensive. More expensive for you to go ahead and apply for a mortgage and be able to pay back your mortgage. More expensive for you to keep swiping that credit card because you have higher interest on that credit card. More expensive for you to take out that loan, go ahead and buy that car that you wanted. It's going to make it more expensive. So guess what people do? People stop spending. People don't take out that car loan. People don't go ahead and buy that house. People don't spend those extra things in their credit card, which is going to help bring down inflation, but it also brings down the market because we're not stimulating the market and buying as many products. I just want to kind of throw this out here. How inflation impacts the stock market. We have seen that a rise in inflation drives monetary authorities to raise interest rates. Increases in interest rates result in a shift of assets from equity to debt as the risk to reward changes. Here's how. Let's say a debt instrument previously offered returns of a 6% PA and is now offering an 8% PA. Due to an increase in interest rates, suppose equity return remains constant at 15%. The risk-reward ratio has gone down from 2.5 times, 15% to 6% to 1.9 times, 15% to 8%. As interest rates keep increasing, the risk-reward ratio keeps dropping, and this is one of the main reasons why investors shift from equity to debt. So, we can see that as we have, just in simple words, guys, for anyone who I just lost right there, in simple words is whenever interest rates are rising, our risk and reward basically becomes less. Less reward, more risk. We don't want to be trading with less reward and more risk. That doesn't make sense to us. And that's why when we take a look over on the S&P 500, us to invest into the market, are there times that we can go ahead and make profit? Well, let's just take a screenshot. Are there times, since again, the start of the year right here, were there times to profit? Sure. There's a nice rally right here. 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 But does that overcome the fact that our main risk has been this? So do we have reward? The answer is yes. But is there risk? There's a whole lot more risk than there is reward right now in this market, which is why inflation is holding this on up. So taking a look over on this inflation chart at this moment, it says United States inflation rate. And you could see how we're going up higher and higher and higher and higher. And as we cross on over from 7 to 7.9 to 8 to 8.3 to 8.6 to 9.1, and in July was 8.5. So the thing is, we did just have that little decrease from last month, right? We did have this little decrease. Now, if we go over into August data tomorrow, and we're, let's say, at 8, is that going to confirm that we are downtrending? But let's just remember something here. We did go from 8.5 to 8.3, but then we jumped on up to 8.6. Then we jumped on up to 9.1. So does that mean, just because we had gone from 9.1 to 8.5 that we can't be up any higher? So that's something that we definitely want to be aware of tomorrow, that if we are above 8.5, that could be when things start getting a lot, crazier. So let's go ahead and let's take a look at right here. It says economic week to be dominated by inflation with Tuesday's report on consumer prices. So early this year, as prices for common necessities such as gasoline and groceries began their inexorable rise, economists and market analysts seized on the monthly readout on the consumer price index for signs on how entrenched inflation was becoming. In June, the annual rate reached 9.1% to its highest level in 4 decades, stunning most observers and prompting the Federal Reserve to hike interest rates by consecutive 3/4 of a point. Now, however, with the rate easing to 8.5% in July, the focus has shifted to see how much inflation is receding from its peak, if that indeed has been reached. On Tuesday, the government will report the CPI for August with expectations it may hit 8% or even break the 7.9% barrier. So what does this mean for us tomorrow, team? If we wake up tomorrow at the time of 8:30 a.m. Eastern time and we see a press release that says CPI data, inflation is now at the price of, or is at 7.8, that would be insane. Anything under 8% is going to make the stock market tomorrow go on a huge rise. And the reason why is because investors are going to say, we're beating inflation. We're doing it, baby. We're beating inflation. And then what are we going to see? We're going to see a lot of buying. So people are going to be extremely happy tomorrow. While that would still be nearly 4 times the rate sets its average annual target of 2%, it would represent some small victory in the central bank's battle against the scourge of steadily rising prices. The direction of inflation is often cited by economists as more important than the numerical level. So we definitely want to see what's going to be coming on up here next. Tomorrow, remember, anything that comes out that is less than 8% is amazing news, and it's a victory for, again, the economy, for the stock market, for beating inflation, and that's where the market is most likely going to have another rise and rip. And tomorrow could be a huge green day. So, what else do we have? Markets are bracing for key inflation data this week. Analysts expect a knee-jerk gain if CPI falls, but don't bet on the Fed to pivot its upcoming meeting. So, we know Jerome Powell, he said on 2 weeks ago at the Jackson, Wyoming Hole conference, right? I believe that's what it is, Jackson Hole Conference. He said that no matter what, we're not easing up on inflation. Even if we're beating inflation in August and we have a drop on down to 7.9, 7.8%, he still is implying we're going 0.75. So what I think is going to happen, this is going to be a prediction at this moment. Prediction is, I believe tomorrow we are going to be having that small victory against inflation. Tomorrow, I think we're going to see inflation at 7.9%. And you know what's going to happen? Traders are going to get absolutely fired up, and I do think we're going to have a rocket of a green day. I think we're going to have a very nice green day coming on up tomorrow. And the reason why is because we are showing back-to-back months of inflation pulling back from that 9.1% peak. Now, we know on September 21st is when inflation data is essentially going to be, or not inflation data, is when interest rates are going to be risen by the Federal Reserve. Jerome Powell will be speaking on September 21st. I think we are going to slowly move on up. Yes, there will be days of consolidation. We will have maybe red day here, maybe red day here. Yes, we will have, again, green day that starts spiking back on up, small green day, and maybe we get that breakout. Maybe we get that rip right here. But if all of a sudden on the 21st, Jerome Powell states, hey, inflation, it's been great that we've been able to come back, but we're still doing another 0.75%, we are going to see another big red day back on down. So something along this line is what I am thinking. Tomorrow, very nice green day as people are be so focused on the absolute the day of having that small victory, rise all the way up towards around 415, 418, 419, 420 on the S&P 500. Maybe about a week of consolidation before we head on over into the next week of inflation actual interest rates. And that's going to be on September 21st, where if they do continue to raise 0.75%, we will probably get a drop back on down. I'm thinking victories this week. Get ready to sell and do your shorts starting up next week. So I wanted to go over this to make sure every single trader, number one, understands the history and the story over the past 2 years. Also, again, from there, you guys understand how to be able to make money in this market. You guys can just be buying options and contracts off of, again, the SPY. A lot of you guys like to play SPX, or again, just your favorite blue chip play such as Tesla, NVDA, Apple, Amazon, Google, Facebook, whatever, right? So make sure you guys are ready. The thing to watch tomorrow is going to be that inflation data to have it less than 8%. Let's see if we get that small victory tomorrow, but 8:30 a.m. tomorrow is when that comes out live. Let's do it, team.